Good morning, and thanks so much for tuning in. You're watching Trade Talk on BK Prime. My name is Alex Matthew, and with me is Hiral. Morning, Hiral.
Good morning, Alex.
It's going to be a busy day, and that is to say the least today, because at the end of the day is what is probably going to be the highlight for global markets, which is the rate decision by the US Federal Reserve. And I think that is going to color the way that global markets trade. Indeed, our markets are also expected to see consolidation.
Absolutely. And if you see in our markets, we've been cautious. One of the reasons being the Fed meeting, and that's the reason the sell-off has started to come. In yesterday's session, we ended below the 19,700 mark already. Today, if you see Gift Nifty as well, it's indicating a start around similar levels of 19,700. But where from here on is going to be crucial, because there are two things that come in on a Thursday. The decision of the Fed will impact our markets tomorrow, and you have
ECB.
expiry tomorrow.
Oh, and the ECB.
And the ECB, which is later on. But so three things that actually dominate in terms of market reaction.
But interestingly, and I think Neeraj was pointing out this earlier as well, we spotted it yesterday at the close. You saw India VIX come off in a very big way, and Neeraj was pointing out that it was close to 2011 levels, which is quite significant. So you're seeing a coming off of volatility in several markets. In the US as well, you saw the VIX come off. So that's something to watch.
Absolutely. But what's happening, Alex, is if you see the WIX, the correlation between the market movement and the WIX over the last couple of trading sessions has not really been in tandem as we've always seen, right? So there is some bit of a disconnect that's coming in on that front, but how it moves from here on is going to be crucial, because what's happening is we're just moving further down and further away from those 20,000 levels.
Certainly. So earnings is going to be a clear focus in trade today. Several nifty companies posting results. But of course, you have corporate announcements by two very large companies that will take center stage, and one in particular. And we're talking about Tata Motors at the start, because you had the earnings, of course, but you also had an announcement that the DVR, which is the differential voting right, which is going to be extinguished or cancelled. A ratio that this is going to be done in is that if you hold 10 shares of the Tata Motors DVR, you will get 7 ordinary shares. That translates to a 23%. The implied price of the DVR is a 23% premium to what was the closing price for the DVR on Tuesday, and it is 30% below what Tata Motors price was on Tuesday. But there are several more implications beyond that, of course. Hiral, one, the share capital of Tata Motors as a whole, once this takes place, and they're talking about it taking more than a year to pan out, the share capital will shrink. There are tax implications. What does this mean for shareholders? All of this needs clarity.
Absolutely. A lot of factors that need to be considered over here. So two things that you'll have Tata Motors react to, right? One is in terms of cancellation of the DVR, and secondly is in terms of earnings. But to get more details on it, let's actually welcome in Sunny Agrawal from SBICAP Securities. Sunny, good morning and welcome to the show.
Yeah, good morning, Hiral. Thanks for having me on the show.
Always a pleasure to speak to you. Sunny, let's start with, Tata Motors. Two parts to this. One is we talk about the earnings, and two is we talk about the delisting of the DVR. To start off with, in terms of the earnings, what's your read overall? Because JLR clearly has been one of the outperforming factors here.
Yeah, definitely a robust set of earnings by Tata Motors, purely driven by JLR. So a EBIT margin of 8.6%. Totally surprised in terms of margin. At the same time, the volume growth is kicking on well. So for the first quarter, 93,000 units sales volume. Again, the company has went on record to say that quarter 2 will be again the same 93,000 unit sales. At the same time, they have retained the sales guidance of 4 lakh unit for entire financial year 24. So what I believe is that Tata Motors as of now is under promising and over delivering, because obviously in case there is an volume expansion, at the same time margins are supportive, then it may happen that post second quarter we may see an upgradation in terms of margin guidance also. So overall, a pretty good outlook in terms of JLR business. Commercial vehicle, although they have lost the market share, but again, margin are very supportive over there. So that business is doing well. Passenger vehicle, basically, again, there are two parts to this. One is normal passenger vehicle IC engine, that portfolio is doing well. Few launches in the SUV segment will be seen in the second half of FY24. That will again aid the volume growth. Electric vehicle portfolio is under trouble because on the margin front. Again, the company has clarified that first quarter was the quarter where they have sponsored the IPL. At the same time, the sale prices for the battery are on a higher side and they have started to come off. So the margin expansion on EV portfolio will also be seen in second half. So basically, all engine firing for Tata Motors, a pretty good outlook in terms of earning growth for FY24 as well as in terms of free cash flow. Debt reduction will also be seen during the financial year 24. So I feel again a pretty bullish outlook. One can easily expect a price target of 700, 750 as a consensus from entire broking community.
Interesting. Okay, so we've primarily spoken about the earnings so far, but I think the focus today, Sunny, is clearly going to be about that corporate action that was announced. And we're also trying to make sense of it, right? Because there is expected to be a tax implication of it. I think to a certain extent, our viewers have also read about the ratio and the implied value. But before we get into that implied value and what it means for shareholders and what they should do, potential shareholders as well, could you take us through the tax implications as you have understood them?
Yeah, basically, Alex, what will happen is that Tata Motors is going to create one trust wherein all these shares will be transferred, and that trust will be executing entire transaction of conversion from DVR to ordinary share. Now, coming to the tax implication, basically there will be three angles to the tax implication. One is withholding tax on a deemed dividend. Now, why this concept of deemed dividend has came in? So what is happening? The shares which are allocated in lieu of Tata Motors DVR of normal ordinary share, that will be treated as a deemed dividend. Now the treatment of withholding tax on deemed dividend will be different for the different class of investor. Like for mutual fund or insurance or institutions, the withholding tax on deemed dividend will be nil, 0%. For domestic resident, it will be 10%. For FPI, it will be between 22 to 23, 24%. And for NRI, it will be 24%. Then second angle on withholding tax is on capital gains on issue of ordinary share. It will be nil for institution, domestic and FPI. But for NRI, it will be in the range of 12%. And again, the third is short-term capital gain, since this share will be sold to recover this tax liability on a short-term capital gain tax. It will be nil for institution, 17 to 18% for domestic resident, 16 to 17% for FPI, and 18% for NRI. But I would like to clarify the withholding tax on deemed dividend will be adjusted in the hands of the shareholder. But at the same time, the capital gains on issue of ordinary share and that will be absorbed by the trust by selling the shares of Tata Motors in the market. So overall, there will be some implied cost when we think of an arbitrage between Tata Motors DVR as well as Tata Motors. So the 23% premium which we are seeing right now, it may shrink when the market open today. So to the extent of this dividend liability.
Right, so Sunny, does this actually imply that there will be something like fractional allotment that will come in this case, taking the entire scenario of deemed dividend and the breakups that you've already given us right now?
Yeah, so definitely the management has clarified that there can be a fractional allotment. And in that case, again, the same mechanism will be applied wherein the company will be selling those fractional shares and the cash will be deposited to the respective shareholders to that extent.
Okay, but they've also in that notification, Sunny, spoken about why they're doing this. Ostensibly because it is a complex structure, ostensibly because since the listing, they have said that the discount that the DVR trades at to the ordinary share has widened from what was 10% earlier at listing to about 40% on average. And as a result of which, this significantly understates the market capitalization of Tata Motors. Do you think that, one, what do you make of this, and what happens to Tata Motors ordinary shares once this process is completed?
Yeah, definitely the discount has always been in the range of 40 to 50%. And what I believe is that the entire process of consolidating the shareholding, what is my understanding is that maybe 12 to 24th month down the line, we may see some demerger of some of the businesses from the Tata Motors. So once this consolidation in terms of shareholding is done, we may see some demerger of maybe passenger vehicle or commercial vehicle to that extent. So that once the consolidation is over, the demerger process can be easily taken care of. And at the same time, since the equity share that is getting extinguished due to this entire restructuring of capital to the extent of 4%, that will be EPS accretive for the existing shareholder. So again, a win-win situation for the shareholders in the short term also, and in medium to long term as well.
Right. So, Sunny, the next question is more from an investor perspective, because the clear question that comes in now is how will both of these react in trade today, right? Clearly, the swap ratio is pretty much in favor of Tata Motors DVR. So, there is some amount of arbitrage opportunity that actually exists. So, one is, what should the arbitrage opportunity be? Two, a follow up to that is in terms of what should the strategy be, and what would you advise investors to do?
Yeah, so definitely it is positive for Tata Motors DVR shareholder, and we may see a positive reaction to the extent of 10 to 15%. Why I am saying that? Why only 10 to 15% when clear theoretical arbitrage is to the extent of 23%? Because it may happen that few guys in the opening trade may try to short the Tata Motors plain vanilla share and try to grab onto the Tata Motors DVR. So the gap, the arbitrage opportunity may get filled in the first 10 to 15 minutes. And at the same time, since the transaction will get consummated over the period of 12 to 15 months, so there is an opportunity cost attached to that. So to that extent also, we may see the stock share price adjusting. So my feeling is that during the opening trade, Tata Motors DVR may open up in the range of 12 to 15%. Tata Motors may stay flat, or we may see some negative reaction in the initial trade on Tata Motors. And once this adjustment is done, then street will again go back to the earning growth and future growth outlook of Tata Motors. So post that, we may see a gradual upward movement in both the share prices of Tata Motors DVR as well as Tata Motor ordinary share in the same ratio as been discussed over the show.
Okay. So we've talked about potential moves in the market. We'll see soon enough how that pans out. Let's quickly turn, Sunny, to Larsen & Toubro and first talk about the results, which were positive. What's your overall take on the results?
Again, Larsen & Toubro, very robust set of result. Although on margin front, there are some issue on the infrastructure side. But management has went on record to say that second half is the year when we will see a margin coming back to the 8 to 9% range. So there were some legacy projects which has hold on to the margins in this quarter. But one thing is very positive on Larsen & Toubro is the healthy order book, right? So 4 lakh crore plus order book. Again, the addition on infrastructure, which is their core business, has been the jump is to the extent of 100% year over year. So I feel overall a pretty pretty strong set of number by Larsen & Toubro. At the same time, the buyback at the price of 3,000 rupees, although the buyback is to the extent of only 2 to 3% of the total outstanding equity share, but at least it set a benchmark that the 3,000 rupees is a fair value for Larsen & Toubro in the medium to long term. From the it gives a stamp that 3,000 can be the fair value in medium to long term. And I feel again, looking at a good healthy business outlook, the fair value of the business again can be in the range of 2,900 to 3,000.
Sunny, a quick one in terms of the buyback. This is the first buyback that L&T has announced since listing. 10,000 crores is the overall buyback size, and the maximum price is 3,000 rupees per share. What would you advise investors to do? Participate in the buyback or not, taking the kind of value creation we've already seen from an L&T?
One has to keep in mind that since although the buyback is to the extent of 10,000 crore, but in terms of percentage holding, it is hardly 2 to 3% of the whether it is for the retail shareholder or the all the shareholders of Larsen & Toubro. So the acceptance ratio may not be very significantly high. So what I would suggest is that if somebody is a long-term investor, one should stay put in the Larsen & Toubro for a long-term investment horizon. And if somebody wish to encash on the buyback opportunity, one can try their luck by tendering the share, and in case those shares get tender, one can again come back to the market and buy the share from the open market.
Yeah, and perhaps that gap of 16% will be closed in the interim. Thank you so much, Sunny, for taking the time and for speaking to us. Pleasure speaking with you.
Thank you.
All right, let's turn to the other earnings. I mentioned quite a few to watch out for. SBI Life is the one that we're focusing on first, and Mona is joining in to give you some perspective on what to expect. I believe it's expected to be not a very significant move because of the high base of last year, but what are the key highlights?
Yeah, so it's a beat on the estimates, at least the Bloomberg Street estimates, both on the revenue and the net profit front. The net profit was up 45% to 381 crores. Revenue almost up sixfold at 27,692 crores. VNB, however, is down 1% year on year, and the VNB margins have weakened. They've come down to 28.8% levels from 30.4% levels. So now the management here had to say that it's because of a change in the product mix. So there was a lot of pent-up demand last year for non-par products, which now has gone down and sort of come to a normal level. So on a high base, that's the problem. Also, there's been an increase in the ULIP, maybe because of the buoyancy in the markets. That's what the management is talking about. However, they've said that they're comfortable with the current levels, 28.8%. So we can expect the year FY24 to have VNB margins at around 28 to 29%. Also, they've retained a really high growth guidance of 20% premiums in FY24. Their persistency ratios for the 13th and 25th month have fallen. 61st month still going strong. Overall, Nomura has lowered its price target to 1550. Current market levels are 1300. Jefferies has also retained a buy and has suggested a target price of 1530.
Right. Thanks, Monal, for getting us the details. And if time permits, we will come back to you on Cipla and Dr. Reddy's preview as well. So stay with us on that. But before that, we will quickly get in Rishi to get us more details in terms of the other, small cap and mid cap companies that have reported numbers. How have they been, and what reactions are we expected to see, Rishi?
Firstly, there was Cyient that came out with its results. So the revenue and profits, they marginally missed the estimates, but costs also reduced that helped improve the bottom line. Now this growth over the previous year was primarily driven by order wins in the aerospace, automotive, and energy verticals. Next, we have Dixon Technologies. So the revenue beat estimates, but profit and margins came out below estimates. Now, costs across the board, they were higher, which have weighed down on the profits. Now, then we have Delta Corp. It reported the highest ever revenue at 272 crores, and it also had margin expansion at both the EBITDA as well as net profit levels. Now, the casino gaming segment, it achieved an EBITDA of about 100 crores, and the margin also improved by over 10%. Then we have Amber Enterprises. The cost fell by 120 crores, and revenue was also down by 7%, but because of the cost reduction, net profit was up by 9%. Then we have Triveni Engineering. So the sugar company faced flattish growth and the profits missed estimates. However, this was primarily driven by a lower turnover in the sugar business, while the alcohol and the aggregate engineering turnover, it improved over the previous corresponding quarter. Now, then we have UTI AMC. Revenue and profits faced a big jump, and they also beat estimates. But however, this was driven by a one-off of 173 crores increase that was there in the operating income, and this was from the net gain on fair value changes.
All right. Thanks so much for that quick wrap, Rishi, of all the earnings that you want to watch out for. And we are continuing to focus on earnings because it's going to be a heavy day in terms of several nifty companies posting results. We've got Dr. Reddy's Laboratories as well as Cipla from the pharma pack that will be posting their Q1 results. And Mona is still standing by to tell us more about what to expect. Mona, over to you.
Yes, so both Dr. Reddy's and Cipla are expected to see a good set of numbers. There's a boost due to the Revlimid, generic version of Revlimid that's been on sale. So there's a healthy growth expected in the US portfolio. However, there's some bit of price erosion that we're still expecting. So the sales and the revenue and the margins should be impacted by the erosion. EBITDA margin is likely to improve because of Revlimid. For Dr. Reddy's, the Bloomberg estimates say that the top line expectation is 6,300 crores for the first quarter, while its net profit is pegged at around 1,000 crores. For Cipla, they've said that there's going to be a low teens growth in the India business, and there's going to be a partial offset due to price erosion in the US and their low sales on albuterol. Overall, we need to see the key monitorables are their upcoming product launches, demand in their key therapeutic areas, and the long-term outlook. Bloomberg has pegged its net profit at 860 crores and revenue to be at around 6,200 crores.
Right. Okay, all right. Thanks so much, Monal, for that. You have to watch out for Tech Mahindra results as well today. And the key highlights, of course, that revenue seen at 13,551 crore rupees. EBIT is seen coming in at just under 2,000 crore rupees. The EBIT margin at about 14.5%, and the PAT number at about 1,150 crore rupees.
So it's going to be interesting, in fact, in terms of technology counters as well, because now you have the entire gamut, which has already reported numbers. Very mixed views coming in terms of the commentary, wherein it's mainly the mid-cap companies which have actually outperformed the large cap peers as well. So that's going to be an interesting mix that we will be watching out for. But apart from this, Alex, a lot of other companies that are in focus on the back of news. Usually on the back of earnings season, you do have less news inflows coming in, but Mika has still managed to gather a few of the companies which could be in focus today. Good morning, Mika. What do you have?
So firstly, we have PML Enterprises, whose board is going to consider share buyback proposal on its upcoming meeting on July 28th. And second, we have Kotak General Insurance. So according to a Reuters article, US insurer Chubb is they're talking to acquire around 49 or 51% majority stake in Kotak General Insurance. The deal would value the company at around $800 million. Third, we have Union Bank that has entered into a strategic partnership with IBM, which aims at accelerating growth via digital transformation. The bank has embarked on a project Sambhav, which aims at creating a digital bank in India. Then we have Canfin Homes that reported a 38.53 crore fraud committed by its employee at the Amla branch. The nature of the fraud was misappropriation of funds, where the funds were transferred to personal accounts by misusing the check signing authority. The fraud was detected on July 24th and an FIR has been lodged. The company informed that there would be only a one-time impact on the profitability to the extent of the misappropriated funds, and no impact on the assets or the asset quality. Then we have Deepak Fertilizers and Petrochemicals Corporation, whose wholly owned subsidiary Mahadan Agritech Limited has purchased compulsory convertible debentures from the IFC for a consideration of 267.34 crores. The CCDs were bought in two tranches at rupees 10 lakh face value. Coming to key changes in the managerial positions, first we have UTI Mutual Fund, where Mr. Surojit Saha retired as the Chief Financial Officer and key managerial personnel for the company, effective from September 30th. The company has now appointed Mr. Vinay Lakhotia as the new CFO, which would be effective from October 1st. Then we have Asian Paints, where R. Sesha Sai was appointed as the new chairman from October 1st, 2023 to January 22nd, 2027. And then he was also a previous independent director at the company. And then we have SBI Life, where the company has named Amit Jingran as the new CEO and managing director. And to conclude, we have Yatharth Hospital and Trauma Care Services, whose IPO goes live today. The IPO includes a fresh issue of 490 crores and an offer for sale for 65.51 lakh shares. The price band is set around 285 to 300 rupees per share. And the company has also raised 206 crores from anchor investors just before the IPO. It allocated 68.6 lakh shares for a price of 300 rupees.
Thanks so much, Mika, for those updates. Among the shares, of course, or stocks that Mika pointed out, Asian Paints was the top loser in trade yesterday, despite a decent set of numbers, not a very big miss on the top line. The bottom line is that you've got a lot of stocks to focus in on. We're just a few minutes away from the start of trade.
Absolutely. And Bajaj Finance and Tata Consumer from the Nifty pack that will continue to remain in focus as well on the back of earnings.
You'll find all of those updates and more on the website bqprime.com and on all of our social media platforms. So do stay tuned.